Good morning everybody and welcome back to episode 69 of Open Crypto, where we keep you informed on a bi-daily basis. If you're interested in keeping fully up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. And the story of the morning today that I found is about the SEC, and it's titled FTX case may bring SEC one step closer to banning crypto exchanges. This is from Decrypt's, a website called Decrypt, and it's a news and business website. And it's written by Sander Lutz. The SEC's language about FTX's token FTT in its charges against two former FTX execs show its heightened aggression toward crypto exchanges. The Securities and Exchange Commission, otherwise known as the SEC, appears to be compiling legal ammunition to take on the beating heart of the global crypto economy, centralized crypto exchanges. And the agency's unfolding case against FTX reveals arguments that could further that strategy. On Wednesday, the SEC announced charges against two key allies of disgraced FTX founder SBF, Caroline Ellison, the former CEO of FTX's affiliate trading firm Alameda Research, and Gary Wang, an FTX co-founder. In addition to revealing that Ellison and Wang flipped on SBF and are now fully cooperating with federal authorities, the complaint divulged that the SEC, in its pursuit of securities fraud charges pertaining to FTX's sale of its native token FTT, appears to be escalating its assault on crypto assets as a whole. That is consistent with the agency's recent successful suit against blockchain-based content sharing platform LBRY. It's no surprise that the SEC charged Ellison and Wang with securities fraud for manipulating the price of FTT and for offering FTT as an unregistered security. That action follows a plethora of past moves taken by the securities regulator, but the complaint's language regarding FTT went notably further. Wednesday's complaint labelled FTT an illiquid crypto asset security, making the subtle but crucial point that the SEC views FTT as a security in itself, regardless of the manner in which it was offered or sold. SEC Chair Gary Gensler doubled down on that view yesterday while announcing the charges against Ellison and Wang, calling FTT an exchange crypto security token that was integral to FTX. And there's quite an important lesson to be held here in that whenever I'm investing in new tokens or new any crypto that I haven't heard of or something like that before, or even ones that I have heard of, I always look at, is it a protocol? The first question I ask myself is does this token power the protocol at the protocol level? So for example, if the Ether, the native currency for the Ethereum network, powers that network. So the answer to that question is yes in the case of ETH. Bitcoin powers the Bitcoin network, it pays for fees. Cardano and uses ADA as its protocol, as its native currency. These are all the first question that I ask myself, because that takes you away from further away from it being a security, shall we say, in my opinion. That's not to say that they are not securities, because it's not up to me to decide what is and isn't, but in my mind it takes us further away, and the further away we are from a security, in my opinion, the risk goes down. Now, FTT was a token on the Ethereum blockchain, and just like there are thousands and thousands of tokens on the Ethereum blockchain, these could easily be securities, and I never invest in any token like that. I don't invest in any tokens on the BNB platform, I don't invest in tokens on the Ethereum platform, the Cardano, Polkadot, none of them. I do invest in things like Cardano itself, Polkadot itself, Monero itself, Ethereum and Bitcoin themselves, because they are the protocol tokens. They are what's powering the network of which the relative network to that token. So, and I've learned this over quite a few years now in crypto, is to not go and not follow the hype, not go with it, because there was a lot of hype about this FTT token at the time with FTX, but I would still never have bought it, because it doesn't it doesn't actually do anything. It's just a token on the Ethereum network. And then I know that they say, well, it was on Cosmos and it was on other things as well, and it was on Terra Luna before that crashed. But it's still just a token. It doesn't. There's no utility. It doesn't actually do anything. Even if they say that, I mean, I remember on FTX that they say if you held so many of these FTT tokens that you would get some kind of trading fee reduction or discount, but trading fees are not that much anyway, so it didn't make much sense to me even then to hold it. So I always be very careful with any tokens that get put on at this point in crypto's life, because we're in its infancy. There's just too many scams. It's too difficult, and apart from anything else, there's too many tokens that it's too easy to launch a token on Ethereum and just call it, open crypto token, and then I start promoting it on my YouTube channel, and if I get popular, or if I'm popular, particularly charismatic, people might buy into that, and then we're in all kinds of difficult legal what goings on, what could happen for the future. Is it security, is it not security, what is it, what have I launched? So it's just too complicated, and and in reality, if I did launch an open crypto token, it's not worth anything in truth. It just wouldn't be worth anything. So I would just be taking value from the people that were buying that token, in the hope that we could sell it to somebody in the future for more money, but it doesn't actually do anything. So I would have to make that token valuable somehow by saying, well, if you buy this token, if you hold so much of this token, then I'll give you a discount on the monthly newsletter, the investor newsletter that I do every month. But it wouldn't be very genuine, and it would be it wouldn't be my style. It's not how I operate. And there's just something scammy about it. There's just something that that kind of thing should be regulated, in my opinion. But we'll see what goes on, and I know that Chair Gensler definitely thinks that it should be regulated, but he thinks everything should be regulated no matter what. While seemingly semantic, the difference between pursuing an action against a company for offering an asset as a security and labelling an asset inherently a security in all contexts marks a shift in the SEC's decades-long approach to security regulation. The change could mean potentially a substantial escalation in the agency's efforts to regulate the crypto industry. If the SEC can get courts to agree that crypto tokens like FTT are securities, regardless of how they are offered, the agency would be able to go after more than just the projects they create these tokens. The SEC could target any intermediary that sells those tokens in any context. In such a scenario, major crypto exchanges like Coinbase, Kraken and Binance would be exposed to immense legal liability and either permitted to participate in crypto-wary registered exchanges like the NYSE or shut down. It's also important to note that the SEC or any government or any regulator can only regulate the exchanges that are centralised, like Coinbase. They cannot regulate decentralised exchanges. And so all this talk of regulation and everything else, they can't shut Bitcoin down, they can't shut Ethereum down, they can't shut crypto down, they can't even shut down the exchanges that are decentralized. All they can do is shut down, at most, the on-ramps and off-ramps into crypto, and that's people basically trading dollars, basically buying Bitcoin if you pay it in dollars or euros. That's all they can do. They could not stop me, for example, paying you in Bitcoin if I wanted to. If you did a service for me, if you washed my car, for example, and I want to pay you in Bitcoin, I could do that. They couldn't do nothing about that. It's totally impossible. So I think the more that they regulate and the more that they crack down will just speed up the decentralization in reality. I don't think they've got no power whatsoever in this, and they don't think they even realize just how little power they have. And it would be much better for them to embrace this technology and get on board than fight it, because it's a fight that they're going to lose, and they're going to lose spectacularly so. And so the sooner they realise that, I think the better it is for them and everybody else. So that's what I've got for you this morning, guys. Remember, everybody, to please subscribe to the channel if you haven't already. Join our team and we'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video, and I'll see you all in 12 hours time.